presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We gonna take it by storm?
Take it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. The TGIF, folks. It's the first one of 2020. Get those jetpacks. Gotta love it. To begin a great relationship, know what you want. Know what the needs of your body are and what the needs of your mind are and what fits well with you. There are millions of men and women, and some of them will be a good match for you and others won't. The two of you only to be like a key and a lock, a match that works. Market-wise, let's take a look at it out here. We have the Dow Industrials down 173, NASDAQ off 45, S&P's down 16. Gold contract up $21, trading at $15.50 an ounce. Silver up 2 cents, $18.07 an ounce. Light sweet crude up $1.80, $62.98 a barrel. Notes and bonds. You got the 10-year up 23 ticks, 129.11. The 30-year up 1.5 points at 158.06. And King Dollar up 7 ticks, trading 96.853. The euro is at 111. The yen is at 108, and the pound is at 130 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. You talk about the deviance, folks. You got to love these markets, man. These are great markets. Okay, so what I mean by that, high volatility. The deviance comes into the marketplace in a day like this in a huge way. You had already gone to highs. The first high that we had up here, bottom line, had no volume. Second high, inside the NASDAQ, you had volume behind the move. That's telling me we're going to get tested again. If you take a look at the S&P futures, we were down at 32.06 overnight. You're at 32.43. Market shook it off. Bottom line, we're up at 32.43. And the high for the day is 32.46, which was established out here at 1 o'clock in the afternoon. I expect we're going to go right after it. And don't be surprised if they run this market right into the close once again. Now, that being said, what you're going to have is this. So watch this. If we take the SPY and we put the SPY up, what you're going to see as you're coming up here, we're up $1.50. We're down $1.52 right now at 323. We start lining this baby up. What you're actually going to see here is that you got another doji that's lining up. We had the last 3 weeks we've had dojis that are up at these highs. The first week, this is inside the SPY now. The third week of December, you had volume up there. The volume up there in the third week was 426 million. We did 146, and we're going to do 213. What I do expect, as I just said, though, I do expect that the highs are going to get tested more than likely Monday or Tuesday. NDX 100, 3 Qs. You can see it inside the 3 Qs. 3 Qs yesterday blew away a B point. Now, it's going to be intriguing here in the Qs is this. The NDX 100, as well as the 3 Qs, as well as the NASDAQ Composite, blew away a B point and did have the volume. So the question is that, okay, is it going to be a test of the high, or are you going to get the full ABC structure on the way up? So first I'm going to do the ABC structure on the way up. Your B point is 214.56. Your A point is approximately 201.78. What did I say, 215? 201.70. Okay, so you're talking about 12.5 points. That would get you 1230, 1223. Yeah, 223. Approximately 223, we hit 216. Okay, so that's 223 would be ABC structure on the way up your price projection. What you want to be looking for is this. How do you come into these highs, number one? Do you reject them? And do you reject them with lighter volume? If that's what you get, guess what? That would be saying that, guess what? This move that's gone higher, you will get a move and a sell-off on the way down. Deviant beyond belief, because what you also have happening here is this. When you get a move this fast down overnight, and this is like the first move that we've had like this in a long time, most times it really does come right back. What I've seen is that when you are at a high and you get this move, I really dig it, because many times you go all the way back up, and then every person that ever shot it ever will say, I'm not going to do this again. That's not going to happen. And guess what? That ends up being a high. You get the test in the high, then you get the pullback. Gold contract. You can see what's happening out here, okay? So the gold contract today will not pull back. Now, I can totally understand why I wouldn't pull back. And the reason being, folks, is this. Gold in general, if it's trending up on a Friday, it's very dangerous to be short gold on a Friday, even if it's just trending up. Never mind that, you know, you have rockets going across the world and drones going across the world, and more basically chaos, okay? So they're not going to sell into the gold market, and that's why you see gold being at 22. And that being said, yet the equities haven't held price. So watch what happens here. The XAU, bottom line, you know, didn't even make it over its highs. We went from 108 to 105. If we go take a look at an Eco Eagle, we bring an Eco Eagle up, what you're going to see is that you're still in the consolidation. You're up, you're flat, really, $60.48. We go take a look at Royal Gold. Royal Gold right now is down $1, light volume. Now, this is what you're going to wrap your head around it. We had gone higher on Monday, 484,000. You go lower today with 235. That's saying that the miners still want higher price. We go take a look at the GDX, and what you're going to see with the GDX got up to a higher high today, gave it up. That's saying the GDX is going to pull back also. We're at 29.08. That's saying 28.66 is game. There's all these deviant moves in the marketplace when you're well, first off, when you're at all-time highs. Secondly, when you have these types of shocks into the marketplace. That's kind of how it shakes out. Notes and bonds. Let's go take a look at the note and bond market. Note and bond market, folks, absolutely want higher price, lower yield. And this is just I've been saying it for years now. It's the ever-ready bunny. I mean, the retracements are so shallow inside these marketplaces, and each and every time, you know, bottom line is plenty of folks that think rates are going to still continue to, they're not still continue to go up. They've been going down to go up, but not, you know, technically, the 10-year right now is at 129. This thing is on its way to 132. Big number. If we take a look at the yield inside the 10-year right now, we're at 1.79. That's saying we're going down to 1.69. Higher price, lower yield. Dow down 183, NASDAQ off 51, S&P's down 17.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 194, Nasdaq's off 53, S&P's down 18.5. Let's go take a look at Freeport McMoRan. So Freeport McMoRan, folks, the low for the year is $8.43. The high is $14.67. This is a very large gold and copper producer. You're trading at $12.83, and this is a confirmed ABC structure on the way up. If you take a look at this, 2.5 months ago it was $8.43. You're at $12.83. You put this on a weekly basis, you're going to see the break top side. We took out the B point the week of December 13th. Your B in this is 11.86. Your A is 8.43. So you're talking about what, $3.50, which will get you up to about 14.10. And today what it's down, it got over the high of the week of the 13th. Doesn't have the volume. It can pull back to the strength. But the bottom line is you get an ABC structure on the way up. And if we go over and we could take a look at the copper contract today, you'll see the copper contract is down 4 pennies. Let's pull this baby up, HGH0. And you're going to see inside the copper contract, you did 72,000 contracts, fast move down, no doubt about that. But guess what? Dramatically lighter volume. The copper contract was going into 115,000 contracts. You've done 72,000, and this copper contract is looking to HG1. It looks to me this copper contract is going to not only go higher, but a lot higher. I think the next move is 93. Let's see. 296. We're at 278, 296 is game. You blow away 296, now you're up to 332 or something. Copper to me, it start moving. That's going to be about, of course, the amount of buying that's happening in China. It's out there. Let's actually go back to SCCO, because what does happen in these sectors, which is pretty cool, you can see SCCO is down $1 today, but guess what? In 4 months, it's from $29 up to $43. SCCO is down on 497,000 shares, and you're going into 932,000. So you're talking about big numbers. You're talking about pulling back with dramatically lighter volume. We had the Federal Reserve come out with their minutes from the December 10th and 11th meeting out here today, and let's see what they have to say. Let's see. Federal Reserve said their monetary policy was likely to remain appropriate for a time, even amid what they saw as a persistent downside risk. Participants regarded the current stance of monetary policy as likely to remain appropriate as long as incoming reports affirmed their outlook. This is a quote from the Federal Reserve. Nevertheless, global developments related both to persistent uncertainty regarding international trade and weakness in economic growth abroad continue to pose some risk to the outlook. Federal officials left interest rates unchanged. They also signaled policy would be on hold through 2020. Pretty amazing. Participants saw sustained economic expansion, labor market strength, and inflation near the 2% goal as the most likely outcomes, in part because their monetary policy support. Federal officials worried that the inflation continued to fall short of their 2% target. The minute said various participants were concerned that indicators were suggesting that the level of longer-term inflation expectations was too low. Policymakers were also optimistic about the labor market, where participants remarking on indications that the unemployment rate could fall further without putting pressure on inflation. The number of participants noted that the labor force participation rate could still fall further. 13 of the 17 officials forecast leaving rates on hold in 2020, according to projections released at the last meeting, with 4 penciling in a quarter-point hike. The majority forecast at least one increase. Look at this, man. This is amazing, actually, folks. So now I don't even know how, you know what, this is like, what blows my mind about this next sentence is like, they have no clue going out this far. A majority forecast at least one increase in 2021 and 2022. Like, really? Yeah, okay. Give me a break. You just, you're talking about, what's going to happen a year and a half from now, 2 years from now? I don't think so. Officials also forecast on their recent steps to calm money markets following strains in September that sent the overnight repo rate surging. Among topics mentioned were the potential role of a standing repo facility and ample reserves regime. That'll be interesting. I suspect, folks, what we will see is a standing repo that facility. That's what they'll end up doing. Because if you remember, at the end of the year, nothing happened. And why nothing happened? Because they had thrown so much money into the marketplace all of December. It's probably, bottom line, that's where they're talking about a standard repo that would be laying out there as banks could come in, every day if they wanted. So there wouldn't be this rush and this high spike in volatility. The Fed had provided $256 billion of temporary liquidity via the open market repurchase near the end of the year. The final operation saw $25.6 billion pumped into the system. That was low money too, by the way. That $25 billion at the end. They were basically offering $150 billion, but by that particular point, folks, what had happened is that they had upped the ante in a huge way, and the bottom line is that the banks didn't need it. If you're watching Tiger TV, I just put the Fed futures up, the federal fund futures up, and what you're going to see when Tommy and I were on the air this morning, we were talking the probability of a rate hike next year was only 3%. So when these minutes come out, the market is saying that, okay, your probability has gone a little bit higher, still very small. The next Fed meeting is on the 29th of January. That hike, the probability is 9.1%, and that is the highest for until all of 2021. It goes from 9.1, and then it goes down to 8, 7, 6, 5, 4, 3, 2, and I just brought you from January all the way to December. So pretty wild, how that's shaken out. The thing that's amazing to me about that in general is that that's showing real stability in the rate structure, right? Well, we don't have stability, folks, inside the bond and note market, okay? The bond and note market, okay, have been some of the most volatile markets out there in spades. And, my take is that, yeah, they're going higher, higher price, lower yield. But when you look at these charts, this bond market has been moving around, in a huge way. So there's divergence between what the Fed fund futures are saying and what the bond market is actually doing. And what has happened in the past is this, is that the note and bond market, as investors and traders keep buying the notes and buying the bonds, it forced the Federal Reserve to come down on rates, because that's where the curve went ballistic. Okay, that's when the 10 came under the 2, and the bottom line is now it's tremendously different now. Now you get a curve that folks like looking at, because the differential inside this curve, I'll bring it up right now, you'll see that it's basically how people like looking at the 10 and 2. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the TFNN Bull Bear Trading Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now up 214. You get the Nasdaq up 50, Nasdaq down 214. S&P's off 21. Nasdaq down 58. Let's go take a look at the XES. So the XES for one of the tigers out here. This is the S&P Oil and Gas Equipment and Service ETF. The low for the year out here is $6.45. The high is $12.26. Let me just see what we get inside here. This is interesting. There's a lot of companies I don't know in here. Okay, so the highest, the biggest value, the biggest weighting is Valuus PLC. It must be a British company. That's 5.3%. Neighbors is 5%. Apache Corporation is 4.8. Diamond Offshore, Transocean, Baker Hughes. Okay, so let's take a look at this baby. So you get over a swing point today. You get volume over it, and it is an ABC up. Let me pull this back and put it on a daily, a weekly, and see what we got. Yeah. Yeah, I wouldn't be biting on this thing. This is, so let me show you something here. So I just put this on a weekly. I'm going to put it on a longer weekly. These have been dogs like in a huge way. And, you know, this equity here went from $49, you know, hit a low a couple weeks ago of $650, coming at the monster resistance. There's not a lot here. And let me show you this. I'm going to go from this, and I want to go into a couple of the oil stocks and show you what you have happening here. Well, first, let's go to the oil contract. So this is the deviance of the marketplace, folks. CL, let's see, CL. Today, what we had is this. Okay, so you got the general that got blown away. Oil goes higher. People are worrying about the supply of oil. If we take a look at the continuous contract, what you're going to see is this. The day after we opened, when the Saudi fields got attacked, which, you know, the allegation was that, yeah, it was Iran that attacked them, you spiked up to $63.38. Then you gave it up in spades and went all the way back down to $50. Well, what we did out here today is that we got to $64.09, and guess what? It can't hold price. It's not holding $63.38. That's saying to me that, guess what? You know, you have all this happening, can't bust them up, they're going to try to bust them down again. Now let's bring up a couple of the equities out here that are decently strong compared to, you know, the XES. Okay, so if I bring up Hess, right? Let me show you something here. On Hess, you've been consolidating for a long period of time. The consolidation goes all the way back to maybe longer than this. Yeah, look at this. Well, you've been consolidating since May of 2018. Now, I suspect that Hess is going to hit its high. You're at 69.39. Bottom line, $74 is game. Okay. ConocoPhillips. We take a look at ConocoPhillips. ConocoPhillips, bottom line, caught a bid out here today. But watch where it's up. It's trading $65.63. But guess what? You are slamming right into your October 2018 downdraft. Each and every time we've been up at this level, it gives it up in spades. We take a look at Oxy, which people have been looking at today. This Oxy would be set up kind of like the XES. You know, the bottom line in, you know, 3 weeks, Occidental has gone from 37 to 43, which is a nice deal. That being said, watch this. The bottom line, this is an equity that just went from a price point of $87, 87 being June of 2018, down to a price point of 37. Not much juice. You know, can it get into $47? Yeah, it can. But that's still not taking a swing point out, not any big deal. Now, that being said, if we go from the, and I know folks have been going into that oil because of oil in general. It's defense stocks, folks. Let me show you something here. You want to, you know, we'll see whether we get a pullback, but the defense stocks are going to the moon. Lockheed Martin confirmed ABC structure on the way up. Now, this started yesterday. You know, yesterday Lockheed Martin went from 390 to 399. It's almost like, you know, basically tensions were starting over there. Investors came in and started buying. Not only Lockheed Martin, they brought Northrop Grumman. I'll show you that too. But Lockheed Martin, this is a monster ABC structure up. You're trading 412 and 453 is on the agenda. It's a big number, man. This not only took out your swing point from 399, you got this swing point taken out with conviction in a huge way. And it's and I'm taking the A to B point. Okay, the B point on this is 399. Your A point is basically 292. Yeah. So, yeah, 399. Yeah, so it's like about 110 A to B, and that would give you 474. That's how that shakes out. And it's a big number. Now, NOC, okay, which is Northrop Grumman. Yeah, Northrop Grumman. That's up $18 today. So the low is 238, the high is 383. This one here, this doesn't look to me like it's going to blow away the high, but same setup. This moved yesterday. Yesterday it moved from 343 to 353. It's at 374. I think let's see. Yeah, this is going to go after its high. So the high this is going after is 383. And let me see, RV, who else is in this thing? Oh, that'd be interesting. So the best performer in here was Northrop Grumman, but Lockheed's not in that type of the business. Let's see what Harris is at. So L3, LHX. Let's see where this is at. So LHX, this is L3 Harris Technologies. It used to be called L3. L3 bought Harris Technologies. Now it's L3 Harris. So the low for the last 12 months is 129. The high is 217. This here also moved yesterday. Yeah, it's pretty intense. They moved these yesterday. 198 to 203. Now you're at 209. And we take this. Yeah, this is going after its highs too. That would be a better sector to basically get in if you're looking at what's going on in the Middle East. I would go in the defense sector versus the oil sector, folks, because the oil sector, bottom line is that we get a lot of oil. And the oil contract itself not holding its highs out here today said quite a bit. That's how that baby's set up. Some of the higher volume equities in this marketplace, and we won't have a high volume market out here today. We have Bank of America is down 68 cents. You get Transocean up 14. Marbell's up 23. We got to go to Tesla. So Tesla, folks, delivered more cars. Bottom line, you got another ABC structure on the way up. Pretty amazing, actually. The B point is 435. Your A point is, my God, 327. So we're talking, what, 108 bucks? That's going to get you at 510. We're at 444. This is a confirmed ABC structure up to 510. You have a short position in Tesla right now of 19.34. They are delivering the product. And the thing that is pretty amazing, too, there's a story out here. If automakers learned anything from 2019, it's the haves and have-nots in the electric car market. And Model 3 is everything, folks, okay, in the car market in the USA. Stay right there. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow is down 230, Nasdaq's up 64, S&P's down 22. Tesla. So the Model 3, folks, the bottom line, this looks to me like this is going to be like an Apple deal, meaning that, you know, Apple changed the phone business, they changed the social business in general, and guess what? They got a huge market share out of that. You had a cult following, great product. When you take a look at these numbers of the Tesla Model 3 and what has happened between the Tesla Model 3 and even their other models, and then you take the other car companies, folks, the other car companies basically, when you take a look at this, you know, you're going to see that they're not even on the map. So the Model 3 sold in serious volume, estimated 160,000 shares. This is in the U.S. now. Other automakers invest in billions to roll out electric models, have serious catching up to do. After the Model 3, one has to scroll down far to find rankings of the Tesla Model S and the X and offerings from General Motors on Nissan. You had the Chevy Bolt and Nissan Leaf actually dropping 8.9 and 16%, big numbers. If you happen to be looking at this chart, what you're going to see is that in the fourth quarter, well, the first quarter was the biggest. So first quarter, they pushed out about Tesla, this is Model 3, it's pushed out about 22,000. Second quarter, they pushed out about 38,000. Third quarter, they pushed out about 42,000. And the fourth quarter, looks like they pushed out about 48,000. That being said, now watch this. If you go into the, well, forget the other two models of Tesla. We go into the Chevy Bolt. The Chevy Bolt was lucky, and right across the line, actually, they were pushing out of 5,000 vehicles, and then the Nissan was pushing out about 3,000. That's it. 5,000, 3,000 versus 48,000. Monster numbers, folks. And then you can see, I think what we're really learning here inside of here is that evidently the 3, and I've been in the 3 and I've been in the S, okay? The 3 is the smaller engine, folks, okay? But it is a rocket ship. It's much faster than the fastest cars you've probably been in. And I get a pretty fast car, and let me tell you something, the acceleration, and even in the Model 3, was amazing, absolutely amazing. But you can see when you're looking at this, is that the Model 3 versus their own Model X or the S is dramatically lighter also. In the first quarter, the Model X and S is laying out about 5,000 vehicles per quarter versus the masses when we start talking about they also are not growing as the Model 3 is growing. The Model 3 looks like it's the name of the game here, folks. And that is before, those numbers are before Shanghai just started delivering vehicles last week. They gave the first 15 vehicles to their employees in the Shanghai factory. You're going to see big numbers over there, man. That's the real bottom line. Big numbers are coming at you. King Dollar. What do we have with King Dollar? Get a major rejection of higher price once again out here in King Dollar. King Dollar got all the way up to the price point of Tuesday, which was 97.103. Got to 97.105. Gave it up. Couldn't handle price. 96.881. And if we take a look at King Dollar and we put this on a longer term basis, what you're going to see out here is that King Dollar broke its major uptrend that had started in February of 2018. Your first break was out the second week of December. Next one, we got a lower low this week. Bottom line, that sets up number one, a 95. And I suspect on a longer term basis, we're going to 88. What we did do out here today is where we got the help today, folks, was pretty wild. The Japan markets are closed. That being said, what we did have here, and this happens, you know, when the bottom line is that when you have risk on, okay, is that you had people coming in buying the yen. Well, they were selling the yen. Well, it's down 51 cents. We're actually buying it. They're making it stronger. This is just an inverted chart. So the yen's at 108.06. And the swing point out here was 107.89. We got to 107.84. You broke it, and I expect this yen also is going to start making its way down to 104. So this is going to be pretty wild. The euro out here was trading out. Let's take a look at this euro right now. Euro is trading. That traded down to 111.25. It rejected lower price. And that's saying that that thing can go topside once again up at the 112, 113 area. And the British pound, we take a look at the pound out here. And what you're going to see with the pound, that was down 72 ticks. That basically, guys, closed out at the lows of its trading day out here today. And today what we had, folks, as well as yesterday, our man Teddy Kagstaff, who does an update with Tommy and I every week in the morning, he did Dave White's show today as well as yesterday. So if you are into foreign currency and currency trading, great show, folks. That show's archived. It's on our site. You know, it's just 2 to 3 Eastern Standard Time. You'd pull it up onto Dave's show. Bottom line, great show. You could really learn a lot about the aspect of where these currencies are going, because what we've had here is this. You've had very large changes of trend, and we're going to need follow-through, but the bottom line, the change of trend is out there. Watch this. The Canadian dollar, you want to see something that's pretty wild. The Canadian dollar this week, you know, well, in 2 weeks, it's gone from 133 to 129. That is one monster move, folks, because what does happen is that the last high out here, now, as the Canadian dollar, when I say 130, 136, okay, what happens there is that means it's getting weaker. That's $1.36 Canadian to $1 US. And when you look at the range of this, the range is spectacular inside the Canadian dollar. You know, in 2011, we were down to 94 Canadian dollar to $1 US. That means it was stronger than the dollar. Then it gave it up in spades. It went all the way back up to 146 Canadian dollar to $1 US. So you can imagine that, you know, 1 second, you know, in 2000, so picture this. We'll just keep it. In August 2011, it was a par. So that would mean that 100,000 Canadian dollars is equal to 100,000 US dollars, right? 4 years later, you needed 146,000 Canadian dollars for $1 US. You could see the type of buying power that you lost when you go outside of the country. Inside of the country, it's a different ballgame. That's when you go outside of the country. It affects where we live in Florida quite a bit, because there is a huge amount of Canadians that live here, that come down here for the winter, and you can put a hurting on that. What does happen is that there's many of those Canadians that have to understand foreign currency, and they also hedge themselves, and they do have US dollar accounts, you know, which is that's something that I think in the United States we've never really understood currencies as much as other countries have because of the fact, before the euro came into place, every single country over in Europe, folks, had different currencies. So they had to understand currencies because it would be like us going from, Massachusetts to New Hampshire to Rhode Island. Can you imagine if every little state, because, our states are as big as their countries, every little, that you'd have to figure out, okay, how much money do I have over here? Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 210, NASDAQ off 58, S&P's down 20. If you take a look at this market, folks, what you're going to see, compared to where we were this morning prior to the market open, bottom line, you can't even tell that there was any volatility in this market whatsoever. We put this up on a weekly basis, and you're going to see you're trading right in the middle of the range for the whole week. The top of the range was $324 in the SPY. The bottom was $320. You're at $322. NDX 100, same type of setup. And what I expect, I do expect the NDX 100 to get tested, this high to get tested. If we take a look at the NDX, what you're going to see out here is that you had the high out here of the week of 216, the low of 211, and you're at 214. When you get that close, bottom line wants to get tested. And as I said a little bit earlier, it very well, it is a confirmed ABC structure up when you take a look at the NDX 100 as well as the Qs. The real question is going to be, after this type of downdraft, bottom line is that is the market just going to test the highs in light of volume, then basically give it up? You know, we'll see. Right now, you still have a confirmed ABC structure on the way up. We'll see what kind of volume we get at the close out here. Yesterday, inside the composite, you did 2.8 billion. That's a good number. That's a big number inside the composite, folks. There's no two ways about that. Inside the NYSE, you didn't get the number. 903 million inside the NYSE is not a huge monster. There's no doubt about that. So, kicking into full trading next week. Bottom line is that, you know, you're still in window dressing a bit for Monday and Tuesday. You can see gold, the contract itself held right up. You know, it's going to hold because what's going to happen, no one's going to go short. Well, very few people are going to go short inside the gold market or sell the gold market. Over the weekend, when you get 2.5 days, the gold market opens again, folks. Sunday night at 8:30 in Australia. That's how it works. Australia opens first, then Hong Kong opens, then it starts coming over this side. It's the only time out of the whole week that you have basically a metal market closed. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step inside of it and take ownership of it and fly with it, baby. Come back here and visit us. Larry Pesavento kicks us off Monday morning, 9 o'clock. Outstanding show. Yeah, look at him, folks.